Hello everyone, this is Ryan Mallory for SharePlanner.com. I'm doing one of the long lost market recaps that I have not done in quite a while. I'm going to try and get back into the habit of doing it, but it has been some time since I did my last recap, so hopefully I can bounce back and start doing more of these. A lot of development throughout the course of this year for the site on SharePlanner. I'm very thankful for a lot of the guest posts that have been done, and going to try to play a much more active role in the site going forward. But that doesn't mean that I'm done making the site one of the best places on the web to get trading information, work with other traders, collaborate, and everything else. I got a lot of great plans in the works, including a new chat room that's going to be very trading centric and friendly. So that's in the plans for 2012 early on. So lots to look forward to. All right, enough of giving you my little 30-second speech there, but I want to go ahead and get into the market today. We had a pretty interesting day, what we saw and how we approached it. For me personally, I did two trades. Actually, I only did one trade. I bought SCO, which was a double short of the oil commodity. I bought that at the close yesterday, and I held overnight, and I'm still holding it. But so I have that one, which is really a trade for today, but I just held it overnight. And then TZA I got into early on, and that was actually my biggest gainer of the day. So let's go ahead and look at some of the market indices here. So the first one, S&P, I don't think it's painting a very good picture for us. So this goes back about to January of last year, 2010, and you can see we had the huge run up back in September, formed the head and shoulders, and then come August we just broke right through that neckline on the head and shoulders and dropped. I mean, this was a pretty dramatic fall. I detailed how August was the worst trading month of my life despite finishing higher on the month. It was such a turbulent time for me, and I had to take a lot more risks than I preferred taking. Thankfully it did pan out okay, but you can find that in our knowledge base about how August was the worst trading month of my life. But in any case, we had this consolidation, this wide channel that we started trading in for August and September. Some incredibly volatile days. In fact, if this area right here was like 4 straight 400 plus point moves in the market straight. So that was an incredible time there. But then we break out of that channel, and then we form a parallel channel right above the previous channel. So get there, then we have another hefty sell-off, brought back fears that we were going to be seeing a similar move back to what we saw in July and August, but we didn't. We bounced higher. So now we sell off over 2% today, and where does that leave us at? Well, if you go back to the highs of July 7th, you'll see that we have a perfectly drawn downward trend line that the market cannot seem to break through. It's tried, but it hasn't done it yet. And what we've had over the past 1, 2, 3, I don't think today is a true test because we sold off out of the gate. Actually, you could say today was, because in the pre-market the futures were up. The 8:30 jobless claims came out, the market skyrocketed, and then you had some news come out from one of the guys at the European Central Bank about not buying their bonds aggressively or whatever, and the market just sold right off, and it never stopped the entire day. So you could say, counting this morning's pre-market, we have 1, 2, 3, and 4 tests of this downward trend line, and that doesn't bode well. Now, up until yesterday, I thought there was a possibility that the market could be just simply consolidating, sort of catching its breath right underneath that trend line before breaking through. But today definitely changes the picture some. If the bulls are going to recover, they need to keep the follow through from happening again tomorrow, because the last time we had a nice little sell-off like we did today, we continued for about 1, 2, 3, 4, 5, 6 more days before finally bouncing. We had a sell-off here, but bounced before, selling off further in the days after. And then here we had a nice sell-off, and then another day that persisted. So while I can't say that we'll go straight down from here with any certainty, I don't think that we're going to be breaking out of this channel anytime soon. If anything, I think at the very least we'll consolidate in this level. Probability wise, I say we go further down, test this 50-day, probably break through it before maybe finding some support. You do have a trend line that's not drawn here, but I'll draw real quickly for you that you can see there the lows from October connected with the lows from November, and you have somewhat of a trend line here. So I see that the first support level here is going to be somewhere around this 1175 to 1200 range. We break through that, then I would say probably going to either A, test these lows from October, or bounce off of the trend line that started back in July of 2010 at 1040. And that would be a dramatic sell-off. I keep seeing all these people predicting that I don't know, these talking heads, I don't even know them by name, but they keep talking about, I think one of them maybe is Dougie Cass, but you know, if you haven't followed him on Twitter yet, I don't take anything he says serious at all, but it is somewhat humorous to constantly see him acting like he has the crystal ball on the market. But you know, I don't see us going to 1350 before year's end. I think there's like 13 or 14 days left in the trading year, so the thought that we could move that high before then is somewhat ludicrous to me. But hey, I've been proven wrong. I don't claim to know the facts, but I just, looking at probability wise, we got a nice channel here. We're bouncing off of that channel, so if we continue to stay in this channel, you would think that while it could be drastic, whoops, don't want to move the wrong lines here, we could be trading all the way back down to here. I mean, if things get grotesque enough, and that would bode bad for the markets. It would get us into some major bearish territory around the 1,000 level. That's not going to happen for some time unless we have a repeat of what happened back in July and August. That could happen, considering that things are starting to come to a head with the events in Europe. Even though the market seems to be somewhat in denial over the last couple of weeks, we're finally starting to see that weakness creep through in equities today. But if it really does implode, I wouldn't doubt that the market could go down here. And while the U.S. is the best house, the U.S. markets are the best house in a very bad neighborhood, it's not going to be spared from a European meltdown. It'll take a drastic hit too, just not to the extent that France and Germany and all these other countries, and Spain, Italy, and all those countries will take. So I'm bearish on the market, okay? Not until it proves otherwise. It needs to push through this downward trend line, and then, okay, maybe I'll start getting optimistic. If it does that, okay, and it could. I mean, crazier things have happened in this market. You had this huge monster rally that took a lot of people by surprise. So I'm not naive enough to think that my predictions are worth its weight in gold. I'm giving you an outlook, a probability of what seems to be logical, what seems to be probable, and to help you manage the risk. Like, I wouldn't be buying stocks after the way the market closed today and based on how it has responded to similar days in recent past. Okay, because there's a good chance we're going to see something like that in the coming days. Let's go ahead and look at some of the trades, the two trades that I made. SCO. Like for instance, SCO, I held it overnight because I think oil was going to go noticeably lower. I could be wrong on that. Oil could pop $5 tomorrow and I'm looking at a loss. That's the possibilities that exist in this market. So, SCO, we have a double bottom. This correlates with the price of oil. So let's look at oil first and see what I was looking at. You have a double top here in oil commodities, and just to show you what I'm talking about here, you have a somewhat almost like of a declining top, but you can see here that the weakness is starting to persist. If it breaks through that 200-day moving average, that's probably going to create a little bit of additional selling power in the markets, and then the bottom on oil would fall out if USO, for instance, drops below 36.80 or so, and then you'll start seeing it really pick up. So SCO, going back to that, got in. You can see that it made some good headwinds or good progress today, busting through the 10 and the 20-day moving average. I really don't chart too much according to SCO. I go back off of USO and base my decisions on what actual price is doing, and even in more of a detailed way, I go to the actual price of oil. If you're using Thinkorswim, that's /CL and track the commodity itself. But for the sake of this video here, I'm going to continue to hold. You can see when we've bounced before, we've gotten some decent follow through on the days thereafter. So I'm looking for another good day tomorrow, and then I'll probably close that position out. If we don't, and the market goes south or higher tomorrow, and oil goes with it, then I'm probably going to have to move. Well, actually, I'll just pull this chart over here. I'm going to put my stop loss right here at 39.19. So I have about $1 to work with going into tomorrow. If it drops below 39.19, I'm out of the trade. But right now I've got some good gains. I've got a little bit of padding. Breaking out of this range here today was very important. You can see here how you could draw two horizontal lines, and it was contained within this price range perfectly today, and then broke out into the close. Very good. Basically sealed the deal on me holding oil overnight, or this double short of oil. TZA, a little bit more intricate as to why I got into it early on this morning and why I believe that the market was going to continue to head lower. I'll get rid of this trend line because it's irrelevant. I'm going to pull up SPX just to give you a detail. The way I trade TZA and TNA is I don't trade off of their charts either, because they're really just a picture of another commodity, whether they're magnified by 2x or 3x. It represents small caps, but even small caps can be pretty volatile. So S&P tends to dictate the direction of the markets and what goes on in those 500 stocks. So I actually chart against the S&P and look for breaks and support, resistance, and trend lines to get either long TNA or TZA. So this morning, and I'll pull this chart out again, when the market opened, I looked at the price action from going back to December 1st, and you can see we had this beautiful neckline here on the S&P 500. You could say you have a head and shoulders pattern, with this being the left shoulder, the head, and then the right shoulder, and then the breakthrough. It doesn't have to look exactly like a head and shoulder. It's the psychology behind the pattern that shows that weakness is starting to prevail despite the market, looking somewhat bullish at the time. The conditions started to erode. Once this line right here was violated, I jumped right into TZA, and the play didn't actually work too good at first. We dropped down, and I thought I was going to do all right on the trade, and then popped back up. And so at that point, I was actually in the red a little bit, but I added more TZA to my position. I think at one point it was probably about 15-20% of my portfolio allocated to TZA, which provides for a nice little run once it finally started going. I got out when this market started dropping harder right around here. That was around 120 in the day. So let's pull up TZA and show you exactly what I'm talking about. I got a TZA at 29.14, so I got most of the gains. I would have hated to see this little drop right towards the close, because that might have been probably would have forced me out probably around 28.85, just knowing myself and how I respond to certain things. This little price move would not have resounded well with me, and I would have gotten out on a break of that. But I didn't. I got out on better strength, so I don't really regret not getting out at 29.50 or holding into the close, because I never would have realized it, because I would have gotten out at a much lower price because of this price action here that happened in the final hour of trading. So getting out at 29.14, I'm thrilled about. I made 6% on that trade. Got in somewhere, I believe, around 27.95. So when this market broke through here earlier, I got out, added some more around on this dip, and then closed out around 130 or so. So that's basically how I traded today. Give you my outlook on the market overall. And I'm going to try and do these videos a little bit more consistently, not every day, but on a regular basis, to say the least. And just get back into the real-time trading commentary that you guys have come used to being provided with in the past. So definitely partake in the SharePlanner chat room each day. There's about 50 to 60 people that come in every morning. It's free. Put some reviews out there about some of the different financial products that you like or dislike. That helps everybody out to know where to put their sacred money at. And then also join us in the Traders Lounge. There's lots of good trading topics and discussions there. All this is free. And then if you do want to pay for something, check out Adam's Options Income newsletter, which guarantees that you'll make more money than the price of the newsletter every month, or your money back. That's for the duration that you have the newsletter for. And then also my own personal investment system. Alrighty, y'all take care, and let's tackle these markets tomorrow, whether they're up or down. We'll take it a day at a time. See you.